Welcome everybody to the daily update. We're doing the coronavirus update for property managers. And today's guest, we have Chris Picciurro on from Integrated Financial Services. He is a licensed CPA, and he has been around the property management community for quite some time dealing with NARPM. He has a lot of NARPM clients that go to him and ask him for consultations and does tax work. I mean, he's got a lot going on in the financial world, and so it's a really good resource for us to have him on today for the show. And before we even jumped on, we're talking SBA loans, we're talking this, that, and the other. I mean, we just jumped right into it. So without further ado, Chris, can you give us a couple minutes to introduce yourself?
Yeah, well, I thought this was a virtual happy hour, so I'm on the wrong channel. Hey. That sounds good. I would, once April 15th hits, we'll be happy. But although we do have that extension till July 15th. So I'm a CPA. I've been in practice for about 20 years, and we help, our niche is people in the real estate business. 90% of our clients are either property managers, owners, syndicators, hard money lenders, all across the gamut, subcontractors. A third of our clients are actually international clients. So we help with your ITINs, W-8 forms, and all that fun compliance stuff. 2/3 of our clients are domestic. I have a theory that, as most of us, when we first started our business, so for me, it was 18 years ago, we're kind of general practitioners. We're just doing whatever we can within the laws to make money. And then you find what your passions are. So for mine are real estate and athletics. So I love to work with clients in those industries because I really, as a real estate investor, it's great. So I always say, if you're struggling, if you're an attorney, a CPA, a financial advisor, someone that wants to grow their practice, just write down the 2 or 3 things you really have a passion for and start going after and involving yourself in those industries. So yeah, no one knows everything, but I've been so blessed to be a part of NARPM and a couple IRM and all these other acronyms that we've done. We provide some continuing education for, and so I'm happy to be here, and I really appreciate you guys thinking of me. I guess I was probably, got dragged out of the bullpen, but that's all right. I'll take it.
I definitely thought of you first for a CPA because you have a national presence, meaning that you're not just focusing on one particular state and that's it. You kind of have a good grasp of what's going on throughout the country. I know there's a lot of state-specific filings that everybody has to worry about, but it's a big thing for property managers, of course, is a federal tax return. So big news was the push of the due date for the federal taxes. That's July 15th now instead of April 15th. So that's good news. Make sure everybody registers that so they don't have to stress out about getting their taxes in. And so I'm sure Matt has all kinds of cool questions he can ask you because he's the one that always prepares for this. He's kind of the bookworm nerd that writes questions down.
I'll start. I mean, how is, especially in light of the coronavirus, us pushing this off, there's going to be some benefits already to us filing later, right? We're going to be able to essentially retroactively do some things that'll make us more money on our filing.
Right. So what happened was, now my personal practice, and I personally reside in the Nashville area. So about 2 weeks before the coronavirus disaster hit, quote unquote, which I'll explain, we had some tornadoes rip through Davidson County and a couple surrounding counties. So at that point, and also with hurricanes and that sort of stuff. So whenever you have a federally declared disaster area, what happens is typically the IRS will step in and provide everyone an additional 3 months to file their tax return. And pay. So you go from April 15th down to July 15th. So for our clients that were in Davidson County, which is the Nashville area, they automatically, July 15th is the new April 15th. So for all intents and purposes, that first quarterly estimated tax payment, which you can include all your activity till June, is now due July 15th, and your balance due in 2019 is due July 15th. So those are some really nice advantages as far as holding on to your cash, especially right now. And so once coronavirus hit, the Department of Treasury came together a couple weeks ago, I think at the beginning of last week, and said, I think on Monday, and said, the whole country is a federally declared disaster area. So we're going to give, of course, in their infinite wisdom, they gave everyone till July 15th to pay their tax, but didn't automatically give them till July 15th to file. Then 2 days, so after we recorded videos and got them out to all of our clients, they said, oh yeah, we should have made this filing. So there are huge advantages. I mean, I would say 40% of our clients do extensions anyway. because most of our clients are real estate investors. So sometimes they're making determinations on, straddle 1031 exchanges. They're making, decisions on accelerated depreciation or investing in qualified opportunity zone funds or contributing to SEP plans. So yeah, with this, just think in your mind, July 15th is the new April 15th, which there is a lot of advantages to that. I mean, that's why I love extensions, because tax preparation is just the end result of your planning for the year before or your lack of planning. So if I'm going to do planning for 2020 my 2020 planning starts when my 2019 tax return's done. So isn't it nice to have a whole look into half of the year 2020 for those clients that, had to do their quarterly estimates on their 2019 income, that their income is going to be drastically less this year? They're going to have to redo their estimates or pivot. So extra time is really helpful for many reasons.
Talk about, is there any benefit, like any sort of expense that we're experiencing now that we're going to be able to retroactively file on our 2019 taxes? Like maybe PTO we're giving, like coronavirus related PTO we're giving to team members. Is there anything like that where you're going to be able to receive that cash now, or is that a possibility?
I mean, anything is a possibility. Nothing that I'm aware of, although I'm not aware of everything.
That's what.
Well, not that I'm aware of.
Well, talk about that though. The PTO, we're giving PTO now. Are you familiar with the PTO, coronavirus related PTO, where we're required to give 10 days of COVID-19 PTO?
Yeah, it's interesting. I was just listening to a podcast on that, or a recorded webinar, and a lot of it is a state-by-state basis, and also it comes down to what's in your employee handbook, assuming you have an employee handbook. There are some tax credits for payroll that are paid to coronavirus victims. I think the biggest opportunity right now that everyone should be running to take advantage of is this PPP opportunity.
Yeah, let's talk about that. What do you know about it? We did a whole show on it on Friday, and we got blown up. It's a lot of people are interested in this because it affects a lot of people. Exactly.
So it's confusing because at first, once everyone was declared the whole country was declared a federal disaster area. Then a lot of people were rushing to apply for the EIDL program, which is the Economic Injury Disaster Loan. And that's a loan that you apply directly with the SBA for. And what was happening is the SBA was giving you a $10,000, almost like I don't want to call it a stipend, but a deposit, and they're still processing those. And then they would come back with a loan. Interestingly enough, if you apply for the EIDL right now, you can't even put in how much you're applying for. It's just capturing that. Then when the PPP was announced, which I think was the most generous opportunity we've seen, at least in my lifetime. And with the PPP, it's a loan that is forgivable, and it converts to a non-taxable grant for people that are trying to keep their businesses going. So the theory is the federal government's going to provide us with funds to keep the lights on, keep some people employed, as opposed to shutting everything down. And the calculation at this point is I'm sure you guys covered, but whatever your annual payroll was, the average monthly payroll times 2.5% was going to be your amount. And I know you applied BAM.
Yeah, I got my application right here, already filled it out, and have already sent it in to the bank. One of the interesting things is the government, because they realize how slow they are at processing these things, and they just don't have enough people to process them really fast. They're processing these through your local bank, right? And
exactly. They're pushing it down. And I think some of the larger banks are trying to, one of my clients is a senior VP at a bank that I won't mention, but not that it's bad. I just don't want to out anyone. But that bank is a larger bank, and they are currently, they're only going to be accepting, from my understanding, applications online. And they're trying to take that application you have in your hand and try to code it into their software. So, but yeah, and then you have to deal with the other big button issue for business owners is unemployment. If now unemployment is now going to be available for gig economists, the gig economy, 1099 people, and S corp owners, business owners. So the practical advice to me would be just apply for everything. I mean, why not? It seems as though you can't have both an EIDL loan and a PPP program distribution at the same time. But if for some reason your EIDL loan comes in at an amount that obviously you can't ask for, let's say they give you $40,000, you could always use the PPP funds to pay that off, and then use those moving forward. So we know you have 8 weeks to deploy the money you get from the PPP, but I don't think many business owners have a problem spending money, and that's where planning comes in.
There's been some misunderstandings on that, and I don't know which is right. I read a piece of good information today from our local bank, Seacoast Commerce Bank, basically paraphrasing all that. And from what I could read, you could have both. You could do the EIDL, which is that disaster loan with the $10,000 advance/grant, and that would roll in to the PPP.
It would basically become a part of the PPP loan.
Right. That's correct. So you can have, air quote, both, but, it would start with that EIDL one. I don't think you can get the PPP one and then go back and get the EIDL. Right. Is that correct?
That's why my best advice to clients would be, apply for them both at this point.
And one of the things that the banks are telling us now is, hey, this just dropped like right before we got on. We went ahead and filled out our loan. We went ahead and sent it in, but we also need to be patient with banks because most of them are telling us we don't even know what to do with the loan, with the application until maybe Friday this week. So don't feel like if you're watching this or listening to this right now that you've totally missed the boat. This literally is hot off the presses and nothing's going to happen before Friday. And I know it's going to take even these banks that are small and agile, some big, with tons of people, it's going to take them a while to sort through the mess and process everything. The only thing I worry about is are they going to run out of money? I know that's not something you might know, Chris, but boy, it sure freaks me out and makes me not sleep at night.
Well, there is one thing that just came out today. I was reading through the Drudge Report, and already the president is pushing for another $2 trillion sort of economic stimulus plan going on. Chris, any comments on that? Did you see that part today?
I haven't seen that yet. And unfortunately, this is all hitting during tax season because back to, we have some clients that we're trying to get returns done for that are, we have some clients, a few clients that are not self-employed, but they're looking for their stimulus payment, and maybe they would qualify on their 19 return, but they wouldn't have qualified on their 18 return. So they're trying to get their 19 return filed. With mortgage rates so low, we have a lot of clients that are trying to get their 19 filed. So the pressure's still on, and it's easy to take our pedal off the metal because of the July 15th deadline. So to answer your question, I haven't seen that yet, but I wouldn't be surprised because just recently everyone got mandated through I think April 30th as a stay inside order. So yeah, I mean, I am a little worried with the PPP as I'm looking at some of the information that it's gonna, would the money run out? Would they keep funding it? It's one of those things and as CPAs in our community, we're trying, we look at things in black and white typically. And so for instance, if someone says, okay, this is a meal and this is an entertainment. Now, of course, I'm going to try to make it a meal. So you get a half deduction for it, but at least we know what the definition is. And now we don't know, we have to, I guess, look at things a little more black and white, and just try to help clients out. Because as CPAs, we're afraid to help clients fill out a personal financial statement because the banks are going to come after us and try to sue us for an attestation work. So yeah, I would say that the clients and the business owners that are organized, that have their documents together, that have good accounting systems are going to benefit fastest.
Yeah, get the information quickest. I do have a question about taking the money. So once we take the money and let's say it all gets forgiven as a grant, how is that treated on our 2020 tax returns? Is that going to look like ordinary income to the company and essentially be taxed?
That's a great question. I was talking about that with because us accountants, we are just so geeky. from a technical perspective, like, are you going to get a 1099-C, which is a cancellation of debt income? How are we going to report this? Because is it going to be a non-taxable, for corporations, they fill out, and in partnerships, they fill out an M1, which basically reconciles their book versus tax income. But what about a sole proprietor? So from my understanding, in tax prep is going to be a nightmare next year. So, my understanding is, because we have another issue that we could talk about as far as retirement distributions and having 3 years to pay it back. It's like, are we going to, but we don't have to jump to that one yet, but.
So the truth is we don't know yet. We don't know what. Yeah, go ahead.
Yeah, no, I'm sorry. Yeah, I don't think we know yet. I think that what I would do would be, if it was my client, what I would do is, if that client received the funds, I would classify that as a liability on the balance sheet. I would apply qualified payments to that liability, up to that liability, and then payments above that would go on the as a deduction. That way you have an accounting for it. And I would run this through the balance sheet just like a normal loan, unless it, and then go from there. So, yeah.
Very good. So we don't know yet, but that's a great way for people to handle it on their books, just so they can track it, because we are going to have to, whether if you're not accounting for it, it's going to turn into a long-term loan. And what we want it to be is a grant. And so being able to separately pull out what's happened against that balance sheet, I think makes a lot of sense for everybody.
So what I've heard also too, Chris, back me up on this maybe, is if you get any sort of money, I've heard to put it in a separate account and just pay nothing but approved expenses out of that account, just as kind of like a best practice. Would you advise that versus trying to just mix it in with your other accounts and then hope QuickBooks can separate it out? I mean, do you like the separate account method?
I like that. Yeah, I do like the separate account method, because on top of, like I said, I like putting it in as a balance sheet item and applying expenses against it, and a separate account. I'll give you an example. I've had clients, my practice started in Detroit. So in Detroit, they're building another bridge from Canada to Detroit, from Windsor, Canada. And I've had clients that were victims in an eminent domain case, where basically their property was taken and they're getting these funds from the government, and they have a couple years to buy another facility. So that's how we handled it. They set up a separate bank account, and we set up a balance, just like I explained, a similar situation. They have not received a 1099 for that for that yet. So we don't know what would happen. But yeah, I would definitely set up a separate bank account. That's a good idea. Or if you currently have a payroll account, a lot of businesses have a separate account for their payroll, then maybe start paying some of the subcontractors out of that payroll account and some of the qualified expenses. We know that, I think rent, just looking at, there's certain qualified expenses that can be paid.
Yeah, it's like rent, mortgage interest, obviously paying your team members. There's a whole bunch of qualified expenses that could deduct from that.
Yeah, it makes you wonder too. There's things in there that are going to be like gray, like question mark, what do you do? Like commissions, for example, leasing commissions. It's technically pay, but it's technically, I don't know how to classify some of these things. And we're going through some of this stuff with our team, and then we're going to go back to our CPA to ask some of these questions. But there's mentions of just things that we just won't really know. And so I guess we would want to err on the side of caution on that one rather than be too aggressive. But yeah, it's just been a fascinating time, man. And I mentioned before we got into it is, don't forget your other businesses. Like under RentWorks, we have RentWorks. That's a separate EIN and LLC. But also, everybody knows they have the Property Management Mastermind Conference business. That's a separate LLC and EIN with the Biz Dev Mastermind. So we're going to be applying for something for that. And then, of course, we have Managers Rekey, which is an inspection service that does rekeying and then also does our home inspections. So that's another business, again, all separate EINs and LLCs. And so what I'm telling everybody about is, if you have other ancillary separate businesses, be sure to either include them in the umbrella of what you want to apply for, and or do a separate application for them alone, just to capture this opportunity.
It's going to be like, remember the movie Brewster's Millions? It's trying to get rid of this thing. Well, and you bring up, we have to really look, because I'm always looking at the tax planning side. Like, what if you own your building and you could substantiate paying yourself and more rent? Maybe you pay, but so we don't know what's going to happen, but we have to look at the planning opportunities, or because it seems like one of the payroll items was retirement plan contributions. So do we do we become more generous with the retirement plan contributions?
Yeah, and so you got to look at this as this is an absolute money dump into the economy. Like the Fed's at a $2 trillion level. I mean, God, we can't even imagine that money. I mean, it's just so much, you just can't even imagine it. They're just trying to put money into the economy wherever they can to keep everything rolling. And, they can give it to everybody and $1,200 a month times 2. And they can also, what they're doing is pumping this billions, 350 billion with a B into the small businesses. I mean, it's just an amazing amount of funds that are just going to be pumped into the economy, which makes me worry. We start talking big scale strategically of what's going to happen with the country and everything else. It makes me a little worried about that, but probably more than we can tackle in this episode.
Well, this is probably the best investment for the country, if you think about it, to essentially go into debt. I mean, we hate to do that, but it is an investment in keeping people working. It's an investment in keeping the engine going. And, as bad as I hate debt and hate the country going into deeper debt, it really is kind of a necessary evil to get the money in the hands of the people like us business owners that are out there employing people and keep food on the table and keep things pushing through the system. Just handing money to people is not as good as sticking it at the top of the funnel and letting it flow through the system, in my opinion. So they are giving money to everybody, in these $1,250 checks. And so a lot of people on our team are going to have extra cash, and a lot of our residents are going to have extra money. And so, hopefully it finds its way back into the economy. I mean, that's the goal for it.
I think, the bigger picture is I was talking to my business partner about this. I finally feel appreciated as a business owner. We're trusted with something. And I think the government realizes that they do not have the bandwidth to administer all of these programs to get the money ultimately into the hands of the people that need it, the week-to-week people out there that need this money to survive, or they become a burden of society as far as homeless, as far as, just bigger picture. So it was a move we had to make. And for the most part, the business owners are going, when you're given that money, I like how it's structured where you have to use it for these purposes and you're rewarded for that. So instead of it being the other way where everyone gets $10,000 and then it has to trickle up to the business owners, that would have been a kind of a disaster. So
now for our owners that we represent, I mean, is there any advice from your side on how they can deal or get tax advantages for, being short of rent? I mean, they're going to have to pay their own property taxes. No one's going to defer that probably. They have property taxes, they have expenses. I mean, consider yourself an owner, and what kind of tax advantages could you start to position yourself for, and how do we as property managers help that?
Right. Well, I think for the owners, from my understanding, the EIDL program, you could qualify for that based on lost rents. If when I was looking through that, I was going through a couple fake applications just to get it, feel for it. If they have mortgages, a lot of the mortgage companies are letting them defer their payment, so to help their cash flow a little bit. And I haven't seen anything where it's going to be like, okay, if you own a rental property and you're supposed to receive rent that you're not getting it. So other than the EIDL, which is a loan, if they have, they're not going to have really, I'm just looking at unless they're the professional landlord, they're not going to have the PPP available. So,
well, but one of the benefits to our owners too, and this is one of the things I'm telling my team is our residents are going to have money. They may not have money now. They may have gotten furloughed, laid off, reduced hours over the last couple of weeks, but they're going to have money in the next 2 to 3 weeks. They can file for unemployment. Unemployment, they bumped it $600 per week for 6 weeks, I think, Chris?
Yeah, it's going to be 13 weeks.
So
I'm cheating and looking at my
so they're going to be making all this money, and then they're going to give them a check on top of that, $1,250 per adult plus $500 for children. They're going to have money to pay rent. And so maybe our owners aren't going to be as affected as we originally thought. Maybe they're not going to get their money as quickly as we thought. But I think, going to the mortgage company and asking for them to essentially put off payment, maybe pay interest. We found that some of our loans, people are letting us pay only interest. some of our rent, people are letting us pay less than the full amount.
Mm-hmm.
And so, just asking those questions of your landlords and asking those questions of mortgage companies for our owners, probably a pretty good thing to do.
Yeah, I would agree. I think the landlord, isn't right now they're in a bad position. The count's 0-1, but they're still going to be able to see some good pitches, because if you think about it, if everyone's supposed to stay in their house for another at least 1 month, maybe 2 months, that means their tenants aren't working. I think the speed that the tenants are receiving income, because what's the tenant's other option? They can't leave the house. They're not going to find other residents, most likely. So if you're patient with your tenant, you might take it in the shins for a month or so, but great point that they're going to have money in their pocket pretty quickly. And for some of these folks, if the unemployment's $300-400 a month plus the $600, that's more than they're making anyway.
Yeah, I've even been talking to my team about, could you even suggest that they pay ahead? Hey, make sure you don't worry about this for the next couple of months. Go ahead and pay ahead. The other thing that we're talking about and internally is, let's go ahead and renew these residents right now. Even people that have submitted notice, maybe they've submitted it 30, 60, 90 days out, they may be changing their minds right now. And so for our owners, what a great opportunity to have a resident for a whole nother year just to tie them in. Maybe you don't raise the rent, maybe just keep it steady Eddie as we go, and just keep it going for our owners. I think there's a lot of opportunities that are going to come from this. And I don't want people to be so focused on surviving, but there's also a thriving side of this, that it's going to create opportunities for our owners. It's going to create opportunities for us as property managers.
Right. And I would say if someone is a W-2 person, and let's say they own some properties, you have some options now. One of the things that I'm still diving into it, and it's going to be an administrative nightmare, is the potential to take, I believe, up to $100,000 out of your IRA. It would be taxable. But you don't have to pay the 10% early distribution penalty, and you have 3 years to pay it back. So the question would be, are they going to get a 1099, or is it administered kind of like a 401k loan where it becomes taxable at the end of those 3 years? That could provide them with a little bit of cash flow. A bigger picture too, I was talking to one of our clients, like this, hopefully trying to find the good things about it, is a lesson that people need to do a little more saving in life. And not live so tight. Easier said than done, but still, I mean, it's scary. It's a scary thing. So.
Yeah, no, this is good stuff, Chris. I appreciate everything that you've talked about. I think the thing is, I think as we keep doing these shows, the more I learn is that we don't know everything yet. And so one of the reasons we're doing it on a daily basis is there's constantly new things coming out. We're constantly learning. This picture is getting clearer and clearer. And honestly, the people that are making these decisions don't even know yet. So we're trying to figure out all this stuff going on. Brad?
One of the guests we're going to probably have this week or next week, depending on how long Matt and I can stand each other and doing this whole daily series, is we're going to try and get a home lender on here, because you mentioned, Chris, that a lot of people are doing refinances because the interest rates are stupid low. And I think the lenders are somewhat hungry right now because things have really kind of grinded to a slow, not a halt, but like a slow down. Mm-hmm. And so it'd be an interesting time to refinance. And, the interest rates again are low, and they're probably streamlining these through. Have you seen anything, or have you heard anything about how the lending industry is handling all this? Any news from there?
Well, I believe that the appraisal process has been relaxed. I don't want to use the term drive-by appraisal, but I believe the appraisal process has been relaxed, and I agree. Lenders are gonna, they're gonna want to lend. I think that especially if you're in a situation where you are still employed and making money and you have a lot of equity, it's a good time to do that. So
it'd be a good time. I mean, everything has a silver lining. I just wanted to see if you heard anything about that from the refinance side. Matt, go ahead.
I'll tell you one thing I was thinking of as y'all were talking is, what a great time if you don't own your building. Now may be a great time to either reach out to your landlord, or if you've been looking for a commercial building, because one of the things that's going to take a huge hit in this is commercial real estate. And
I like your comment, Matt. So I'm going to call up my landlord and say, either you sell me the building or I'm not paying rent.
That's what well, hey, you got leverage, right? But I mean, if you think about it, people are going to start working from home more. Commercial real estate is going to take a hit as a result of this, and it's not ever going to be the same. So if you have cash, and I think one of the things about being in the property management business, not that we're going to come through this unscathed, but we are going to be way better off than most. So it may be an opportunity for us to buy a building, invest in some real estate, and instead of paying rent every month, essentially pay your mortgage and build some equity in a retail location.
Yeah, we think there's going to be a lot of opportunities that come out of this whole SBA, PPP, EIDL stuff. I mean, we don't even really know how that's going to work, but obviously if you're sitting on cash, you're going to be able to reinvest that in employees and or growth and or purchasing other companies and or assets. And there's just opportunities abound. So it's a very exciting time. Chris, any parting comments for us on the way out?
Right. I would say parting comments. First of all, if you have the first thing we talked about were tax extensions. I totally forgot one of the best things about extensions is if you bought commercial property or significant residential property is the potential of doing a cost segregation study and pulling those deductions back into the previous year. But that's another episode. So I'm just throwing a line out there for some advanced tax planning. But no, I would say practical advice would be if you think you qualify for unemployment, just go ahead and file as quickly as possible. File for the EIDL and get prepared for the PPP application, and just keep moving forward and for people that are displaced workers or working from your home, try to get into a routine. It's going to take 2-3 weeks to get into that routine and don't have a victim mentality. We're in this together and look at the opportunities from it.
Yeah, keep fighting. Right. Last thing I would say is we went through this whole thing and didn't talk about the fact that I've got hair and you guys don't. So that's my parting comment. I love being on with you guys. This was awesome. Thanks, Brad.
I have to wear my wig next time. All right, thanks, Chris. Take care, everybody.
Bye, guys. Thank you.
All right, thanks.